We're all going on a summer holiday, a little holiday for me and you. That's right, boys and girls. I'm going on holiday. I'm going with the Scruffy Squad to Benidorm. What's that got to do with this video? Not a lot. Well, actually it does, because I want to talk about how building up a small account can give you something. And that's what the squad have done. They've built small accounts and they're using their profits to come on holiday. Why not? Roll the intro and I'll kind of explain what I'm toying with. And a warm welcome, one and all. First time here, big fella Scruff. And I do things quite different here on this channel. There's never any script, so what you see is straight from the heart. Whenever you see me trade, it's in the moment. You'll be able to check that with the timestamps. But more importantly, I look after the guys in the Scruffy Squad. And we discuss things on a regular basis. You know, we live pretty much every day face to face, so it's not like a chat bot or anything like that. We're actually on a Zoom call where we talk to each other. And there's a bar inside of the Discord where they can talk to each other through form of a buddy system. Now, one of the things that comes across is, how do you build accounts up? How do I get from point A to point D? Well, you've got to go A, B, C, D. But most people in the Forex space, because they see the stupid adverts. I mean, there was a one recently flashed up on my Facebook, and I put it in the Discord, and funny enough, some of the guys got caught with it. I'll show you, bear with me.
Well, we're waiting.
Okay guys, found it. Let me just flick this over. I'll just drag this into shot. I'm going to go onto the chart in just a second. I very rarely name and shame somebody. I don't think it's right. Even if I think that they're scum of the earth, I still don't really name and shame them because I don't think it's ethical. But this is just something that came into my feed, and I think it highlights what I want to get across in just a second. So it's a little salute to Clog Dancer saying where I actually put something up and just said bollocks, because that's exactly what it is I'm about to show you. First introduction was was actually trading this chap's copying system. No from the start. Luckily he saw for what it was, didn't lose much money, and the guy was a prick of the highest order. Okay, that kind of sums up what I'm about to say. I don't need to say anything more because Foley, you've done it for me. Well done, boy. All I'll say is bollocks. Let me show you what that bollocks is. This came in my sort of Facebook feed and they prop up all the time. There's a number of red flags here. Free online event. There is nothing free in this world. And trust me, you will never get anything for free. Zero. And if you do, it's worth what you pay for it. Nothing. Right? The next part, which is what worries me, create a full-time income from trading in 90 days. Absolute bollocks. It's not happening. I've done this job nearly 20 years and you cannot do it. Period. If you've got no experience, you will not create an income in 90 days. And even if you've got experience, that's a tough call to make. The next part of it is you're going to be spending 1 hour a day copying professionals. No, I'm going to touch on signals. And then it comes down here, 0 to 10,000 per month in 4 weeks. Absolute bollocks. So why do I get upset about things like that? Because I love my job. I genuinely love it. You know, I love the charts. I love the numbers that's involved in it. And I like the freedom that it gives me. What I hate is the industry. You know, the industry is portrayed that it's easy. It's not. You know, you want a 6-figure salary, the job has to be equal to a 6-figure salary. You know, you need to have some skill. If you haven't got that skill, you have to invest to get that skill. Now, you invest in time and you invest in money, and there's no two ways around it. You know, you're not going to learn how to be a trader on a 15-minute video. You're not going to learn how to be a trader by buying a course and studying it for 90 days. You've got to put the time in. Now, I can give you everything, but I can't give you experience, and this is the bit that they miss out. In order to trade, you need to experience certain elements. The highs, the lows, the greed factor, the excitement. You've got to dial it all down. See, when people go to charts and they're relatively new, their emotional dial is probably up to 9, you know, 8, 9, and they're sort of really excited, click, click, click.
Turn it up to 11.
You watch me trade. My emotional dial's down to 1 and 2. I've got no emotional context to it at all because it's just a job. I just do it over and over. Now, the next part of it is the signals. I hate signal sellers. I hate them with a passion because it's fool's gold. And there's not a hope in hell you're going to make any money from signals. You're not.
Here to sell me some fucking fool's gold.
You might get a couple of lucky streaks, but you're never going to have a lifetime of wage from it. And there's another element to this as well. What if they stop? Say you find a signal provider that is really good. What if they stop? You're high and dry. You've got nowhere to go because somebody was doing the job for you. And if you're in industry and somebody's doing the job for you and eventually you get found out, you get sacked. Well, that's what the market does. Market's our boss. It finds out you're not putting the work in. It'll just sack you. And the way it sacks you in the industry is takes all your money off you.
What?
So, with that said, what am I going to do? Well, I wanted to highlight that in the sense that if you're looking for quick money, easy systems, you're wasting your time. Absolutely wasting time. And funny enough, my wife was talking to me last night about the way that I speak on the videos. And she says, oh, you should really be pushing the positives. You shouldn't be saying the negatives all the time. And I was like trying to explain to her, I said, Joanne, you've sat next to me every day while I do this. You can see how hard it is and sometimes how stressed I get because I do trade for companies and they put pressure on me and it is incredibly pressurizing. You don't see those accounts because the personal and my account.
All right, quit pressuring me, please.
Anyway, as I was saying, Joanne was saying focus on the positives and one thing or another and stop talking about the negative side of the industry. And I was kind of toying with it. And I was thinking, do I show the bad side of it too much? Maybe I do. Maybe I do. But I try not to. But what I try to do is guide you in such a way you're aware of the pitfalls. And if you know what the pitfalls are, at least you can build a plan around them to avoid them. That's the aim. But what about positives? What if you've only got a small amount of money? So I started thinking about that. I thought, well, if you haven't got a lot of money, but you still want to see an account grow, how could you do it? Well, I touched on a video a while ago about farming and about how you start with a small account, build up a bit of profit, and you maybe buy a prop fund. And then from the prop fund, you use the profits to fill a live account. And then from your live account, you can maybe fund a Darwin account, which is an investment. And then I was sitting thinking across the weekend, well, what if you kind of missed the middle out and you were investing in yourself, not other companies or anything, you. And there's a lot of people like to see my Vanguard and how it grows and what it's done. I mean, it's grown really well over the last 2.5 years. In fact, I think it's 3-year-old this January. Yeah, it is. It's 3-year-old this January. I'm sure it is. Anyway, or the process started 3 years ago and we built it up and it's doing quite well. Well, now what I'm going to do is let me show you. It's easy to show you than it is to tell you. I've got a derelict account here. It's an account on my web trader. I don't use it. So what I'm going to do is, it's got nothing in it. It's scratch. It's got zip.
You got nothing. Nothing.
And what I'm going to do is I'm going to put it into this. So I'm going to put 200 quid into a trading account, and I'm going to trade one asset, which is the FTSE. I'm going to get onto why I'm going to do the FTSE as well. And it's a little experiment for myself. And I'm going to put it into here. Now, the value of today, which is 27th of October, and today is the channel's birthday, which is why I'm doing this. Okay. It's currently sitting at a value of 93,225. It's actually lost money because the last update I did at this, it was over 94,000. I've still made money on the month, but it's losing a bit of ground, and I've had to do a bit higgery-jokery. And this is the year to date because it starts on a financial year of April. And as you see, we started the year really badly. It was minus 1,700, but we're ending so far quite well. We're still making money on the investments that's going in. Now, the investments are through investment pots, and you pick your pot and it grows naturally, but you got to keep funding the pot. So what are my investments? So if we look at sort of like an overview and I flick on the investments, you'll see them here. What I've done is, yesterday, I opened up an emerging markets FTSE fund. All right, so it's still a FTSE, which is what I'm going to trade, but it's emerging markets, you know, India, China, that sort of stuff. And what I'm going to do is I'm going to put little chunks of profit into here. Now, it's already making money over the last few days. So we'll put in 50 quid just to set it away. And what I'm going to do with that FTSE account is this. I'm going to trade 200 on the smallest position size. It's about 183 quid in margin I need, which is why I'm starting it with 200 quid. And the minimum bid size, now a bid is price per point. There's a lot of people get confused with what a bid size is, etc. If it's a lot, it'll be 0.05, so it's 50 pence, okay? But in web trader and spread betting terms, because I'm in the UK, that's what I use. It's 50p per point or 50p per bid, okay? So that gets that out the way. But what I'm going to do is every time I've scored 30 pips, I'm going to increase the position size by 5%, as long as the margin will allow it. And then what I'm going to do is I'm going to use my journals. And you see my journals all the time. Give you a quick example of the one that I'm doing on the other small account. Let me just quickly find that for you. Just transition that in. Like I say at the beginning of this, none of it's scripted. It's just me. Now I'm going to show you this because I dropped an almighty bollock on Friday. Big bollock. Luckily I came out positive, but it's not a good day. In fact, it's a terrible day because I put the wrong position size in on a pending set of orders. I meant to put in 50 pence and I actually put in 5 quid because I went 0.5 instead of 0.05. And I was in a rush on Friday. I was really busy trying to catch up with things, people sort of contacting me, blah, blah, blah. And I didn't realize it till the end of the night. Killed everything off. And I ended up taking a colossal, not a colossal loss, but a loss that punched the account hard. But the account is still up. And that's because I monitor what's going on with this. Okay. So we started with 250 at the beginning of this month. And we are still taking a good crack in the bollocks. 347.64, which is a 40% increase. Okay, so I'm still happy with what I've done, and I've still got a profit split that I'll be taking out this week. Now what I'm going to do with that FTSE account is the same thing as this, and I'll set it up with little mandates. So in October, which is the month we're in, I'm looking to get a baseline of 300 and hold trades longer. Well, if I come to here, well, I've done my 300. So what it means is the profit above it, as long as that starting balance is 300 and above for starting in November, I've achieved my task. What that means is I can have bigger position sizes each time, but we're growing constantly. And as you can see through the start, there we are growing it up. And this is a Christmas fund that the guys in the squad decided that we'll just start with a couple £100 and we'll build up to buy some presents. Well, I'm 150 quid up, and I've already had money out of it to the tune of 38.91.
I'd buy that for $1.
So that account is massively up. I'm going to do the same with the FTSE. Now, with the FTSE, I only need to trade once, twice a day. I'm looking at a single asset, and I want around 10 to 20 pips a day out of it. I'm basing it on 100 pips a week. So get 100 pips a week. I'm more than happy, right? 20 a day, Monday through Friday. If I can get it done early, I can get Friday off, because I like to have Friday off. And each time it has profits built up, a little bit the same as what that Christmas account is, I'm going to take the profits out at the end of the month, and I'm going to put it in that FTSE emerging markets, but also have like a sweep account that I have on my bank account. Doesn't do much. It's maybe 20 quid a month or something like that. But every time I buy something, or out of one of my accounts, my direct debit account when my bills come, if there's like 87 pence left, it takes the 87 pence out and puts it into a savings pot. And all those pennies add up, and then at the end of the month, what you've done is you've swept your change. So it means I've always got like I have a touch of OCD when it comes to things like that. But it means my bank account's never a sort of like X amount of pounds, 0.50p. It would take the 50p out and put it in the other account. And then at the end of the month, all those little pennies will add up. I'm going to put that in there as well. And then when I do the update to Vanguard each month, you'll be able to see what the emerging market's doing. And the idea behind this whole process is, it means I'm taking little money, 200 quid. I'm trading it once or twice a day. Now I can do it through swing trading where I set and forget. I can do it through active trading if it's in front of me. And then the pennies that it creates goes in the investment account, and that'll grow itself naturally. So it's best of both worlds. I'm still trading, active, getting to know the markets, learning a craft if that's what you want to do. But at the same time, I'm putting money away that's locked, because once it's in there, it can't come out. I can see the fruits of the labour. To me, that's the art of trading. It's using your money responsibly and having a framework that can potentially give you something good. Now, I'm going to lock that in. Well, I can take it out whenever I like, because it's under an ISA wrapper, which is tax-free. And if I fill my ISA up, which is 20,000 a year, this moment in time, things might change on the budget. I'll just open up another one in the pension fund, and I'll just start putting the money in the pension fund, so I can continue to do this. And that's what I'm going to do. It's just an idea for you. It's thinking outside the box, but yes, going back to the negative side of it. If you think for a second you're going to do this quickly, you think for a second that this job is easy, do not do it, period. And if you see any advert that says this will give you a full-time wage in 90 days, you're in la la land. It's just not happening. It really isn't. It takes money to make money. One of the biggest failures of this industry is an over expectation from under capitalization. And what that means is putting small money in and expecting the returns to be huge. It just doesn't happen. It doesn't happen at all. But you can compound an account up and you can build an account. And if you take your time and have a reasonable expectation, you'll make it in this job. Little steps make a big journey. So as always, guys, trade well, keep your risk managed, but above all, do what you love and the money will follow. See you all in the next one.